Welcome back to the channel, guys. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And if we're in the market, it's seeming pretty boring at this point in time. So let's take a look at some of the price targets for Bitcoin and the stock market in the short term to see if we can continue with this momentum to the upside for the stock market, and any particular traps that are setting up for Bitcoin, looking to that downside price target. Give us a little bit of a timing cycle here as well to see in the short term where we might hit. And of course, should these things not be met, then we want to see what happens to the upside. Like, subscribe, bell notification icon if you haven't already. Do all those shill things down below. And while I'm on the path of the shilling, I'll shill first to you guys. Thanks for all of your fantastic comments in yesterday's video. I'm glad that made a ton of sense, because that was basically like the big market macro update, going through a lot of stuff there, going into the stock market, the US dollar, a lot of these things that basically just come together that we're using for our overall macro analysis of the cycles, which, if you've been here, that old 18.6-year real estate cycle, over 200 years of data, we're still basically on track with that. So I'll touch on that again as we look at the stock market today. Last couple of shills here, guys. Bybit is offering $30,000. Yes, you will have to deposit a shit ton of money and do a lot of trading on the platform to get the 30K, but they have tiered levels as well. Now, a lot of these exchanges are putting on events like this because of FTX collapsing, and of course they want the business. I mean, look, if there's still money left somewhere, exchanges are going to want it. So why not go and try and score yourself 30K? Obviously, if you are uncomfortable with it, don't use it. You don't have to. No one is forcing you to click that link. But if you choose to, then you have those options there to get up to nearly 40K's worth. And as well, for my Aussie guys, Fxckd down there as well. They are not related to FTX, all right? And they don't have any exposure to FTX. It's on their website. It's all public information over there. Right, let's move on with what's happening this week. We've got a few major announcements that have come through last 24 hours. We had the US dollar here, the USD, sorry, in the US. High impact announcements. That's these red little factory looking things here. USD 1.3. This was the core retail sales. So it is above the forecast. That's the actual. All right. The dollar has been relatively stable during this period. The S&P relatively stable as well. What is coming up? There is not too much for the broader markets here. Obviously, in Australia, we've got the unemployment that has come through today, and unemployment rate has dropped a touch. Australian market, we'll look at that briefly for my Aussie guys, just to let you know how all this is coming together with the overall cycle as well. As we look towards land values increasing. Yes, you heard it here from me many times, but some people are still expecting big drops. And I saw some news come out about the US Fed expecting 20% declines on real estate. Now, what usually happens in the news when these things come out, and we saw it in Australia during 2020, our big banks here, so related to whichever country you're in, the banks do the same thing all around the world, trying to screw everyone. They talk about big drops. We saw it in Australia, 2020. CBA, Commonwealth Bank of Australia, this is the biggest bank. So, you know, what I just said there, choose your big bank in your country, said the declines of 30, 40% in real estate. They fucked up big time. People are expecting these big drops. I'm going to leave that swearing in there. I don't care if things get demonetized, whatever. They fucked up. They said these big numbers. The markets then dropped a little, but it was mostly still down from the years before, which was the mid-cycle, and then bounced so hard from that point. Now, I'm not saying we're going to bounce extremely hard like we did out of the pandemic low, but then they start to change their tune. They went 40% down, they went 30% down, they went 20% down. Then they said the market's going to remain flat, and the rest is history. The markets soared up. Now, I see that happening again. Things are starting to lay out in that process across the board. And the majority of people here, what I can see from you guys, you're telling me in the comments as well, you're not necessarily in the stock market, but we're using the stock market as a proxy for the rest of the market. What most people are trying to do, correct me if I'm wrong in the comments section, because, you know, I'm here talking about what I do in the markets and what I hear you guys do as well, is most people are trying to make money from, say, cryptocurrency, Bitcoin, and then go and use that money to have a deposit for a piece of property. So some land or an apartment, which essentially is a fraction of the land that it's on. That's what I see a lot of people trying to do. And of course, others are trying to get out of debt, pay off their student debts, use it to go on a holiday, maybe buy a new car, maybe even just go out for dinner, so, something nice, just improve their lifestyle. But as for the bigger goals, everyone is trying to, the majority of people are trying to use those big lumps of money to go and put it into real estate, which is why I focus a lot on the real estate cycle here. And of course, we look at cryptocurrency as that vehicle to extract money from the market and go and do those bigger things here. So going back to the big high impact news pieces coming up, there isn't too much left. There are some meetings and whatnot here. Look, November 24th, FOMC meeting minutes are being released, and then we have the bigger stuff, say for December 13th, and correct me if I'm wrong, I think there might be something coming up this week. They've got the 13th of December here. This is US dollars, CPI data is coming out. So, another 4 weeks from now, but what we can see from the last 24 hours, there's not too much to really affect the market. And we're not seeing that. We're not seeing major effects right now. We're not seeing huge pumps or huge dumps. The market is basically having a bit of a pullback here. So today's video is obviously a more short-term update across the board because it's basically dead. I'm just telling you the way I'm seeing things. That's what I posted here on Twitter. Again, a couple of shills, Twitter and Instagram, which I put a Q&A up on Instagram. So thank you guys for your comments and questions. I'll be getting back to those on Instagram down below. While the market seems to be a little bit long and boring, that's the way I'm seeing it right now. But I think long term it'll come back bullish. It's just a matter of being patient. S&P. This is the weekly swing up. We're getting a little bit of a pullback here at the 75% extension. We are above the 50% level, 3,900 points. What am I expecting next? Well, should we pull back here? I don't necessarily like markets pulling back at 75% of the weekly, but anything above this sort of 3,900 points is at least a good basing to go and hit that 100% target at 4,100 points. So that's what I'm looking for this particular weekly swing. So if you want to see what that is, that's our yellow indicator line here, the Gann swing indicator as well. So that gives us some target projections for trading. You can use on any time frame. But what I'm doing here is just to give us that next point around 4,100, and of course my major target that I'm waiting for to happen within the next few weeks, hopefully by December, is 4,200 points, and that would then swing us more in favor of the bulls taking control of this bottoming process. You heard it right, bottoming process. It takes time, just like bull markets take time, bear markets take time as well. So S&P, not much has changed in that front. The DXY, the US dollar, it looks like we're putting in a little bit of a low from the other day there on the 15th, and then yesterday we had that freak out news of potential World War III, but as the news happens, it seemed like the missile came from Ukraine into Poland, and things got a little bit muddled up there, but no World War III is coming through. US dollar is looking like it needs to have some sort of a bounce at this point. Should it not bounce, then that's the target again, 104.7. That's the 50% level. That is a significant bottom that happened in August of 2022. You can see here that it's held up on this low for the last 2 or so days. So as for a reversal here, which would then send things crazy again, if we get a jump from the US dollar, we would see some of the prices in commodities probably stabilize. And if they do stabilize, that's a bullish sign. If they fall, then we're basically just balancing out again. Okay, so if they start to fall when the US dollar goes up, probably normal. If they stabilize while the US dollar goes up, strong. All right, the other things we're seeing here is the pound continue up in its strength. The euro holding its ground here at 104, but the pound's at 119 now. Before I click over to the pound, for the US dollar, if we do see a bounce, we've got a couple of levels above us here. These lows here, we're looking at a target around 107.8. And then to the upside, about that 109.5, 110, I'd say at the max here for the 50%. Any sort of closes above on the weekly would then set us up for another attempt at higher prices. But for now, this thing is still looking quite weak. And should we get that breakdown of the 104 levels, then things aren't looking very strong for the US dollar, which is helpful for the assets like, our metals and cryptos that we want to look at. Just a quick look at the pound here as it continues on its surge to 120. You know, I was covering this back in September when the US dollar was getting absolutely destroyed. The US dollar was destroying other currencies and commodities around the globe. And from that low, we said specifically, these are all the data from there, the comments from that point. You know, it's the most extreme panic that we saw in the markets. People were calling for the pound to go under parity with the US dollar. And what's happened from that point? You know, we had a pretty solid 15 to 20% jump from that low, and it is now starting to get back above previous resistance levels. Not there yet. Need to see some weekly closes above that level, but at least it's a pretty strong sign. You've got all higher swing lows here on the way up. They're really, really nice and solid for the pound. That leads us over to the Aussie market very quickly before we hit some Bitcoin and crypto update. Aussie market, mate, we are doing not too bad here. Now, I'm not going to brag on about it because the Aussie market didn't pump anywhere near as hard as what the US markets did out of the pandemic low, but we're only 6.5% away from our previous all-time high. This goes back into the stuff we talk about with the real estate cycle. Australian market, it's no surprises. It's made up of banking. It's made up of mining. So there's a lot to do here with commodities and real estate being banking. The banks are going to make more money as the interest rates rise. They are creating products like I talked about in yesterday's video, whereby it makes buying real estate and land. I know people say housing and housing goes down. Yes, the physical crap that breaks down, it does, but the land doesn't. They are making products with the government, and this is happening across the world, to be able to make things cheaper for the average person, maybe even the young investor or the young home buyer to get into the market. So that's going to then bring those profits into the banking sector. And because the Aussie market is primarily made up of banking and mining, we tend to see this market gain strength towards the second half of the cycle, which is essentially what we're in now. So Aussie market, we put in a double bottom here, and just look at this for the banking and real estate stocks for the US, the UK, Canada, New Zealand, wherever you are, Europe. Look at those stocks moving into the second half. I would say more so the northern countries of Europe rather than the Mediterranean. You know, they've had their problems over the decades here, and it doesn't look like they're going to get as strong as some of the other more developed countries. So let's stick with the developed countries here. The Aussie market, double bottom. We've hit our 100% target here at 7,100 points. Next target above, once we have a bit of a correction, which is what we're in right now, you can see the little pullback, somewhere around 7,500 points, which brings us very close back to the previous all-time highs. I think by the time we get there, obviously we should see some sort of pullback and then move away from that point. But so far, pretty good bounce from 6,400 points. Double bottom has been put in here on the more macro time frame. Markets are starting to move away. So I normally don't get into the Aussie stuff, but I thought I'd do that for the Aussie viewers while the market's a little bit boring, just to show that sign of strength here. And we're above the 50% level from these lows of June and October. You can see this line right here at 6,960 points. So we're still above that level. We've had one weekly close above that, and we're now attempting to close above this next top. All right, on to BTC, and let's look at some of the downside targets and also the upside, what we have to look out for the downside, some of these traps that are setting up, and then obviously the upside price targets to confirm the short-term bullish momentum. So the downside, what I'm looking at here is our daily swing chart. So we see from the top to the bottom and to our next local swing top here at 17,169. The market is really trying to hold at this previous low and get back above the price target of 17,600. We've identified this. It's the previous low. Pretty straightforward stuff. But to the downside, the 100% level, which I don't think is going to be hit, 11,200 points. That's the 100% of this previous move. Okay, if we are to break this 15.5, the 50% level is now at 14,186. So call it 14,200. So a breakdown of where we currently are for BTC, should we break the low and keep going to the 50% and find resistance or support, you would say, and then start to work itself out, that would then put us in a pretty good position to start to work our way back higher. But it needs to happen relatively quickly from the breakdown. Hitting the 50%, bouncing back above the previous low, putting in some higher lows. That's what we want to see if we're to break down. So there can be some of that short-term weakness. Market comes in, gives us that little flush out to the downside to the 14.2, which would then line us up really well with a 50% on the daily. But we definitely want to see that bounce back rather quickly. All right, so that would then just mean that the downside movements are getting shorter. They're getting smaller, shorter to the downside, which is giving us a little bit more strength back in the short term. So that's the downside price target trap that I'm looking out for in case we do break down from here. To the upside, what we need to see relatively quickly, hopefully by the end of this week or next, is a move back into the zone here of 17,600. So you can see these 2 days got rejected and we fell back. But the good news is at least we held up above the previous low, and we're attempting now to try and work our way back above. So that's come into play, obviously, because it was the previous cycle low back in June. Yes, the upside is at about 18.3, which of course is the previous support. So the market is really at a battleground here, trying to get back above this level and hold it. That is going to be the short-term targets for the bulls to flip the bears, get back above, so we can see some strength happen on BTC again. Otherwise, we hang out down at these lower levels, then that just sets us up for another attempt at lower prices to see if we can get some more demand come into the market as the supply just continues to get thrown out into the market. The other good news, at least on the shorter term timeframes, is some of this volume that has come in at the lows. So we can see the volume at the low. That was the previous low that we just hit. And then as the market hit this next low, we got that volume come in on the push, higher low, push again, and we are now within this little trading range at these levels. Yes, there is some bigger volume here at the tops, which was the supply coming in and dropped the market down. However, short term, very short term here on the 4 hour, we got that extra volume come in and the market is slowly climbing its way back up, which is why we've talked so much about that top level, 17,200, and then 17,600 for us, for the bulls, just to regain that strength. Otherwise, this is the trap. This would be the next test to the 15.5 and then beyond. That's it for this boring sideways crab market of BTC. It seems like the action is waiting around in the S&P currencies, the Aussie market, whereas Bitcoin is really just trying to hold its ground here and get past those levels. That's it for today's update. Go and check out the links, all that shill stuff in the video description, and Instagram, Q&As over there, Twitter, if you want to enjoy a little bit more fun while this bear market is on. And of course, don't forget to check out the videos that are popping up on your left-hand side here. 30,000 bucks at Bybit. That's phenomenal. And Bitget nearly up to $9,000 as well. Guys, I'll catch you at the next video. Have a great day. Go and enjoy some sun. Until then, peace out.